Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call Express. Scott, let's get to it. We have U.S. stocks opening down really big today after a very volatile week last week. Now, the S&P had been holding that 1220 level. We're well below it now. What's the line in the sand for you?
Well, this is a new week, and you have to realize what time frame you're trading. Last time we were here, we were talking gut check for the markets. I know last Wednesday, if you remember, we had that tight wedge in the S&P, and we said whichever way we break is going to be very important. That you have to obey your stops and listen to your time frame. And on that Wednesday, we broke below 1240. We broke that wedge to the downside, and now we're heading into a really big area that the macro bulls, not the momentum bulls, are going to have to hold. And we're opening right around there, right in that 1188 to 1195 zone.
If we break below that, do you get bearish on the markets, or do you think we can get constructive?
Well, if we hold it, there's like a thread of constructive nature. But right now, last Wednesday, even IBD put the big picture in market correction. That's when you got bearish. That's when you get out. That's when you got flexible. So for today, I'm coming in flat, and I'm going to look today for some opportunity. I'm going to see if anything can go green. I'm going to see if anything could lead us off those lows. So if you take a look at the chart, let me show you how to maneuver, which I think a lot of you did because I was in Vegas at a trade show, and a lot of people that listen to our show got out of their stocks on Wednesday. This was last Wednesday. Remember this whole wedge pattern that we talked about? Remember the October 4th reversal low, your follow through to that 1292 resistance zone. Remember 1292? Then we talked about this pattern of indecision. We talked about whether or not we can continue to the upside or back down to the downside. So here is your area to get out of some of your stocks. This is when some shorts actually came in, and now opening into this 1188, 1195 zone. This is an area to test some longs perhaps, because look at the move we just had, about 5 to 6% lower in about 3 to 4 days.
So would you be picking some longs and also maybe doing some shorts just to sort of help yourself hedge the risk? I mean, if you look at, I think that now with the super committee kind of off the table, the worry is that we're going to get another downgrade, and the S&P was down over 6% on that Monday after the U.S. was downgraded in August. Are we looking for any kind of that carnage right now?
I think today is a tough day to be short. We just had a big move lower. I think if you were short, you got out of your stocks last Wednesday or Thursday. This is a day to cover into that zone and then let the market go a bit sideways. If we can't rally off this zone, then there might be a better area to short later this week. And on a micro version, if in the first hour, just say we go from down 20 handles to only down 15 handles and nobody's coming in to buy this gap down, then perhaps when we break the morning low, you get on a cash flow short. But the time for a macro short, you better be committed to it because that was last week.
Right. Okay, so let's look at some sectors that you're definitely going to want to be looking at to see if they can go green first. Let's hit on retail because it's been one of the strongest, holding up well, but we're headed into a holiday season with very high expectations. I read a relatively bearish note from Bank of America Merrill Lynch on the consumer over the weekend. Is this the sector you want to look at?
I think it's one of them. It's been holding up better. So if all of a sudden retail falls apart, that'll be another nail in the coffin for the bulls. If you look here on the RTH, you will see that it's still holding higher. It did break this small momentum level. It couldn't break above 114 with the market. So for some guys that trade momentum like myself, you would have been selling it at 112. I think if you did so and you were looking for a place to buy back, it's still above the 50-day. This 107 and 108 will be an area for a constructive hold on retail.
What are the other sectors that you're looking at? I mean, is it going to be more like the semis? Is it going to be oil? What other sectors?
It's going to probably be oil and tech. Oil held up really well last week going into Wednesday. It looked like it was going to break to the upside, and then it did a breakout failure. If you look at the chart of the OAHs, you will see that you had two sell signals, okay? You look right here. Remember this wedge was getting really, really tight after a nice move, a lot of gains here. It broke out, couldn't hold it. We talk about when momentum leaves a chart. That happened right there. If you didn't see it, this was your way out. This is when it broke about 127. So today, I think with the down open for guys who are flat, who followed their rules last week, this area, this is around, I believe, 119. This area could be an area to hold for some macro bulls, probably like Stephanie, who's been holding for a while, probably sold into strength. She might be looking to buy in the hold today because she's a macro holder.
Right, okay, and she likes ENSCO. Okay, so then let's go to some high beta tech like an Apple, Google, and Amazon that you sort of can watch as leaders for the whole tech sector.
These are groups or stocks that I watch every day, and they've been weak. They've been very weak, and they broke down hard over the course of the last few weeks, and we talked about that. So for today, Apple is going to be opening right around the 150-day. I'm going to look for a cash flow trade here. That's at 369. Look at this big move lower. It broke this box formation. We talked about shorting it around 394, right into 369. That's a tough short. If it shows some relative strength where the futures keep going down and Apple stabilizes, I'm going to look for a cute long. If it doesn't hold here, the 200-day is a level where institutions are going to have to try and defend it. That's around 363, 364, but we've talked about that for almost a week and a half.
All right, so we're watching high beta tech, we're watching retail, and we're also watching oil and much more. If you want to see what else we're going to be looking at, check out the entire morning call on the street.